Hey everybody, welcome back. Sive is here with the ForexPeaceArmy.com. As usual, we're talking about euro currency. And as we are doing every weekend, we have prepared the fundamental outlook. This time, the report may be a bit more extended than we usually prepare. Well, it's just because a lot of questions appeared right now, a lot of data have been released, and major part of this information has been treated differently. Not the way how it is treated in the mass media. Among the analysis, for example, the same personal savings, personal consumption have been released with the gross domestic product. Recent personal consumption expenditures also needs to be clarified in a special way, just to pay attention to some details. We are not providing just the conclusions. This is because we would like you understand why we think so and why we are making the particular conclusions based on this data, because it will be unclear as if we would just provide you with conclusions, that's it. But since our resource is mostly educational, so you could understand how to treat the fundamental data and actually why it leads to some conclusions. But we could make some really interesting things, interesting conclusions based on recent data. So if you'd like to, you could read not only about the United States, but mostly in the United States, but also about European Union as well. So it's really clarifies a lot of things and actually let us better to understand the possible direction of the euro currency in a few months. So as usual, I put link down below the video if you'd like to read it. Speaking about the technical analysis, situation and technical picture long term is also changing. So that led us to set some new downside targets. And also you could read in a report, speaking of monthly analysis, weekly chart analysis. Speaking about the short-term perspective, here mostly one thing seems important. As we suggested, that market could stabilize somewhere in 1275, 1350 area, just because this is strong confidence area. Market has completed this OP target. It is normal for market to show some reaction, some stabilization. Besides, as European Central Bank still has some bullish ambitions, I mean, in terms of the rate hike, currently they are fading a bit, but still one rate hike still stands on the table. That is not decisive anymore, just because investors already priced it mostly in, but probably including the strong technical support, this could provide some additional help to the euro accounts to stay on the surface and to get the stabilization around the current levels. So it doesn't mean it can't drop lower, but probably it will be a bit wide range where market will change the intraday directions. If we'll take a look at the longer term charts on the weekly, for example, it could start looking like the channel. So that's what we are expecting and watching for now in this area. But it doesn't mean that it has to happen right from the 1350. The range stands relatively wide. We still suggest that the euro should reach the yearly pivot point that stands at 1278, and probably after that more bullish signs, I mean short-term bullish signs, could appear. So that's the general view. Now if we take a look at the very short-term picture, what to expect on Monday, you could see that once the OP has been tested, market has tried to show the pullback. Actually, it was started by the double repo pattern, and for us now is major question whether it's done and market will keep going lower, or still we will get some continuation. So next week will be short. It will be due to Independence Day in the United States. We will get the payrolls, by the way, on Thursday, and it will be also important central bank meetings in Portugal. So there will be a speech from the Christian Lagarde, from the Kevin Walsh again. It might be interesting to watch. So on the 4 time frame chart, you could see that with this double repo started, it hasn't reached the invalidation point that we specified around 1348. So market was able to stay above it, and actually it means the double repo was valid. If you're taking position with it, well, that's great. Although overall price action was a bit thrilling, not the straightforward, not very fast, but still with this action, market has completed the minimum target of the small thrusting action, because this double repo relates as to this minor thrust as to the big thrust. So on minor thrust, double repo is done. because its minimum target stands at the 50% of the whole frosting action, and market has reached even 618 and has exceeded slightly. With this action, market has reached currently confidence resistance 1420, 1436. Now we're showing big drop. Since the overall price action is not very fast, it's a bit choppy, confluence area, and here you could recognize some bearish pattern on the top. Either you could treat it as a huge shooting star, or you could add a bit these two candles to the sides. From the sides, it might be some kind of the evening star. But anyway, this candle suggests deeper retracement. If you take a look at the hourly chart, market stands actually not too far from the bearish breakout points, break-even point, something like this, because the shooting star on hourly chart is getting the shape of some huge evening star as well. So it doesn't matter how to treat it, the conclusion will be the same, that usually such patterns have a continuation, prolongation. So besides here, we have kind of the godless triple to sell right there. So despite that we have good acceleration, retracement already stands, well, relatively extended. So you can see market hits the confluence area and even already is breaking it. So it's already stands somewhere under these levels. Next one, which will be a vital point for a double repo pattern, is 1365. Besides, it will be very close to the C point lows, and if market will break below it, it simultaneously will do two things. First, it will erase the ABCD pattern, which means that this retracement is over, and second, it will form bearish reversal swing. So here will be fast acceleration, and if there will be a not less fast reversal, that will be bearish. From that standpoint of view, I would do a couple of things. First of all, I wouldn't hurry up with the position taking, because about the long position, because reversal stands relatively fast. Of course, we're speaking about long positions only in relation to the intraday chart for speculative purposes, not for our major daily weekly analysis, where a situation stands bearish. So I wouldn't hurry up with the position taking here. And second, I would wait for performance around 1365 and maybe 1375, because 75, it's a 50% support area. So if we will see some signs of the stabilizations again, so the market start forming bullish patterns around it, intending to turn up, then probably we could consider another chances for position taking. In this case, maybe we'll get larger A, B, C, bottom, D pattern, more extended to the upside, right to the target that we have on the 4 time frame chart, because if double repo will continue to work here, its target will be around 1480. This will be 50% of the whole frosting action. That and towards what I'm watching for. But for now, right at this point, I would make any decisions yet. So I just keep watching on Monday open, see what the performance will be, whether the market will reach the support levels, and if it will, then just keep an eye on them and see what the patterns we are getting around it. So probably on Tuesday we should get some clarity, and that should let us to make some conclusions.